Hey everyone, how's it going? Hope you're good. It's Rodney Leandro here. It's Mastermind R. And today I'm bringing you a video about how you can utilize the free Forex signal group and how everything is going to work. So if you do have any questions, just hit me up on my Instagram, Mastermind R _, and I'll get back to you straight away. So this is going to be very different from other Forex signal groups that you've been in because I'm going to be giving you value and information with regards to how you can effectively utilize this signal group. And I will also be giving you content to how you can improve your trading strategy, your mindset, and your psychology. Now, I've been trading for 2 years now, and I trade with a group of people, and I've studied people like Mark Douglas and the charts. So there's 2 strategies that I'm very competent at, and that's what I'm going to be bringing you through the Forex signal groups. And myself and the people that I trade with, we've seen good results. Now, the most important thing you need to understand is that there is trading commandments. There's rules that you need to follow so that you can become consistently profitable in the markets. And you can do that. And you do not need to know what happens next. And you don't need to win more trades than you lose, believe it or not. Okay, so the trading commandments, this was created by Mark Douglas, and he's worked with 7 to 8 figure traders that were previously blowing accounts, having mistakes, failing, and so on and so forth. And he came up with some commandments that he's taught them and that he's used himself to be consistently profitable. Anything can happen. Anything can happen. You don't need to know what happens next to make money. There is a random distribution between wins and losses for any variable that defines an edge. An edge is nothing more than an indication of a high probability of one thing happening. Every moment in the market is unique. I'm a consistent winner. I'm consistently profitable because I objectify my edges, my strategy. I predefine the risk, or I'm willing to let go of that trade. Risk to reward ones are free. I completely accept the risk. I'm willing to let go of that trade. I act on my edges, my strategies without reservation or hesitation. I pay myself as the market makes money available to me. I continuously monitor my susceptibility for making errors, a review. I understand the absolute necessity of these principles of consistent success, and I therefore never violate them. Trade in sample sizes of 20 or 10. What this means is that the average successful trader will win 3 trades out of 10 or 6 trades out of 10 and still be profitable because of their risk reward, because the odds are in their favor. So if you're taking signals, you don't just want to take 1 to 2 to 3 of the trades. You need to take at least 10 or 20. So you can allow the odds to be in your favor and so you can benefit from the risk to reward. You know, that's how it works. I'm telling you guys. What I'm going to do is go to the next slide that tells you how you can actually take the signals and what it's going to look like. So the risk to reward is always going to be 1 to 3 and above, and you only want to risk 2 to 3% of your account. Because if you do take losses, you won't blow your account, then the losses won't be big. And when you have wins, you can compound those wins in a very effective way. I'm going to be talking about stop profit and making things risk-free, twin trading, so you can manage your greed. My FX book allows you to see all the analyticals of your trading account. So link your account to my FX book, and you can also use the percentage calculator to calculate your lot size so that you're only risking 2 to 3% of your account, depending on what the stop loss is. So really link your account to my FX book. You can see the monthly growth within your account, and I'm sure you'd want to see that. Okay. So my aim is impact over income. I'm here to be of service and to give value because I know whatever positivity, whatever value you give to people, it comes back to you in tenfold. That's the law of the universe. That's how abundance works. And there is abundance. And I also am out to help the people that are a minority and at a disadvantage. Because today we see there's so much inequality. We're up against the banks, we're up against the governments. And instead of marching or just posting something on my Instagram, this is my march, this is my voice, this is my protest, me giving value. Now, how the signals will look in the group is going to be like this: buy limit or stop. That's a pending order. That means we're waiting for price to go to a certain point before we get in. Or it's going to be a market execution, you know. But if it's a market execution, you got to be on point in terms of looking at the group. Now, the entry. So the currency pair is going to be there, Euro USD. The entry is going to be for the pending orders. There's going to be a lot more pending orders anyway, but the entry is here. and you put these coordinates into your MetaTrader 4. The stop loss is here, and it tells you how many pips it is. Put that coordinates into your MetaTrader 4. And then the TP is there, it tells you how many pips it is, and the risk to reward as well. It's always going to be 1 to 3 and above. And like I said, trade with a sample size in terms of taking 10 trades or 20 trades. So, and then aim to grow your account by 20 to 30% a week. That is very, very good growth. Now, how you can actually calculate the lot size, depending on the stop loss, is with the position size calculator on my FX book. You just go to home, you just go to Forex calculators and to the position size calculator. So I've already put in the coordinates. So it's the pound that we're using as our base currency, unless you're in, you know, a different country that doesn't use pounds. So look, you can go here, put euros or US dollars or something. The account size, £350. The risk ratio, 2%, or we can put 3%. The stop loss, 35 pips from that example. And you can just leave that as normal. Euro USD is the pair, and then you just go to calculate. So it says, look, you're risking £7. You're risking £7. The lot size is 0.026. But if you can't put in 0.026, which some brokers you can, but if you can't for some reason, then just put 0.02. 0.02, if you're catching 160 pips with 0.02, let's see how much you're potentially going to gain compared to what you're risking. Let's bring up the calculator. Okay, here it is. Just waiting for this to load. Okay, it's loaded. 0.2 times 160 pips equals 32. So you're risking £7 to make £32, or on a medium account, depending on your account balance, you're risking £70 to make £320. Do you see how it works? Because if it was now 0.2 times 160 is, hold on, no, it's meant to be 2. If it's 0.2, it's 2, and it's £2 per pip. 160 is £320. So that's how you use the calculator to see how much you already know how much you're going to lose. If you lose, how much you're going to win if you win, and it's 2% of the account being risked. This is how you become consistent and profitable. You never risk too much. The odds are in your favor, and you can really start compounding. That's more or less it. That is more or less it. And I'll just let you know about the other things that we have. So we have a partnership with funded accounts as well. So you can actually receive funding once you become a bit more of a consistent trader. So for more information on that, just let us know. And we mentor people as well. We teach and support. We actually have a mentorship program. And why it's good to have a mentor is they've done what you want to do, so they can teach you how to do it as well, and not just the theory. You know, it's like learning football from Ronaldo or learning singing from Beyonce. If you learn from the pros, you will have the results that the pros have. Mentors also allow you to reduce mistakes and reduce the time it takes to be successful, and also reducing your failures and so on and so forth. You know, that's what they do for you. You'll become more effective and more productive if you have a mentor, rather than just doing it and going at it by yourself. So yeah, this is just an example of risk to reward again. So it just says what risk is. Risk implies future uncertainty about a deviation from expected earnings or expected outcome. And then I'm just letting you know, again, the average profitable trader only wins 3 out of 10 trades. Let's say he was risking 50 pips to gain 400. Some of my trades, we've done that. The risk to reward is 1 to 8. So you're risking, you know, £5 to gain £40, £500, £50 to gain £400. And then it just talks about, you know, if you're losing 7, it's going to be a 350 loss, but you won 3, it's 1,200 profit. And then the difference between them is, I think, something like 850, 850. So yeah, focus on about 6 to 7 pairs. And I'll quickly go into this before I lock off this video, and I'm going to pin this video to the Telegram group so everyone can see it. What I trade, how I trade is I do structure and institutional setups. And I also do trend trading as well, man. Any strategy works if you work and if you use the trading commandments. And as you can see here, this is what twin trading is. Twin trading is taking 2 trades, but halving your lot size. So one can just keep riding, and then the other can hit the TP. So the blue and where this finishes is the TP. The black and where this ends is the stop loss. But I would have entered the entries anyway. So let's say the price, you know, comes here, starts going down. After it's about 40 to 30 pips in profit, what you want to do is you want to move the stop loss into entry, making it risk-free, meaning that if the market reverses, you haven't lost any money. You haven't won, but you haven't lost any money. So, you know, the market does like to reverse. That's what we do. That's a little secret nugget there. So moving the stop loss into entry after the trade goes 30 pips into profit. And then we always put the stop loss above the high, just so it doesn't come back there again. We look at the daily, the 4-hour, the 30-minute for entries. And look, this trade hit. And it just missed the entry on the other side because there was another institutional candle, you know, over here. It just missed the entry, but look, the analysis is quite decent. Risk reward was 7 here. Risk reward here was 1 to 4. He was risking 31 pips to make 131 pips. So it's a very good risk to reward. That means you win once, you have to lose 4 times to, you know, cancel out that win. You win once, you have to lose 7 times to cancel out that win. You know, we're really gonna help you become consistent and profitable. But yeah, any questions, hit me up on my Instagram, mastermindr_, or hit me up on my business WhatsApp. Yeah, thanks guys. Spread the word, let everyone know about the free signal group. The only requirement is that you have a live account with my broker, and I'll tell you which broker it is. That's the only requirement. You have a live account with my broker. But thanks guys. Let me stop the recording.